Have you ever seen a stock or a crypto coin just explode in price and thought, man, if only I had gotten in earlier? You see headlines everywhere, people making fortunes overnight, and the temptation is real. You feel that FOMO, the fear of missing out, creeping in. You think, maybe this time it's different. Maybe this is my big break. But what if I told you that the wealthiest, most successful investors, the millionaires and billionaires, actively avoid these hot investments? It sounds counterintuitive, right? Aren't they supposed to be the ones taking big risks for big rewards? Well, today we're going to pull back the curtain and reveal the real reason why chasing the next big thing is often a losing game, and how the truly wealthy play a completely different sport. What most people do and understand is that building and preserving wealth isn't about hitting one massive home run. It's about consistently getting on base and avoiding striking out. Think about it, the media loves a good story. Student turns $1,000 into $1 million with a meme stock. That's exciting. It gets clicks. What doesn't get clicks is investor earns a steady 8% per year for 30 years and becomes a multimillionaire through compound interest. It's boring, but it's how real wealth is built. The hot investment of the day is usually fueled by hype, not fundamentals. It's a bubble inflated by social media trends and speculation, and we all know what happens to bubbles. They pop. When they do, the people who jumped in late, driven by FOMO, are the ones left holding the bag. The core principle that separates seasoned investors from the crowd is this: risk management beats opportunity chasing. A novice investor asks, "How much can I make?" A professional investor asks, "How much can I lose?" This is a fundamental shift in mindset. Millionaires aren't focused on maximizing gains on a single trade. They're focused on minimizing the possibility of a catastrophic loss. Why? Because their primary goal is capital preservation. You can't make money if you've lost all your money. A 50% loss requires a 100% gain just to get back to where you started. That's a brutal climb. By avoiding highly speculative, volatile assets, they protect their downside. They're not trying to get rich quick. They're trying to stay rich for a long, long time. So what do they do instead? They focus on what they can control. You can't control whether a stock will double tomorrow, but you can control your research process. You can control your diversification. You can control your emotional reactions to market swings. The wealthy invest in businesses they understand, with proven track records, strong financials, and a competitive advantage. They look for value, not hype. They might buy a boring company that pays a steady dividend over a flashy tech startup with no profits. Why? Because the boring company has a history of weathering economic storms, while the flashy startup could be gone in a year. It's about playing the long game. This brings us to an evergreen truth about markets. Human psychology rarely changes. The same patterns of fear and greed that drove the Dutch tulip mania in the 1600s are the same patterns we see in today as crypto bubbles and meme stock frenzies. The names and assets change, but the story is identical. A new, exciting thing appears. Early adopters make a fortune. The media picks it up, creating a frenzy. The general public piles in at the peak, driven by greed and the fear of being left behind. Then reality sets in, the bubble pops, and the latecomers are wiped out. The wealthy understand this cycle. They've seen it play out time and time again. Think of it like a casino. The person chasing a hot slot machine, believing it's due for a jackpot, is gambling. They're relying on luck. The person who owns the casino, however, isn't gambling. They've set up a system where, over thousands of baits, the mathematical odds are in their favor. They win through discipline and process, not luck. Successful investors act like the casino owner, not the gambler. Their strategy is their edge. It's a system built on principles, not predictions. They do need to know what the next hot thing is because their wealth isn't dependent on it. So how can you apply this millionaire mindset to your own financial journey? First, stop chasing hot tips and start doing your homework. Invest in what you understand. If you can't explain why you own a particular asset in a few simple sentences, you probably shouldn't own it. Second, build a diversified portfolio. Don't put all your eggs in one basket, especially if that basket is a highly speculative, trendy asset. Spread your investments across different sectors and asset classes to reduce risk. Third, and this is the hardest part, learn to control your emotions. When the market is soaring and everyone is euphoric, be cautious. When the market is crashing and everyone is panicking, look for opportunities to buy quality assets at a discount. This is the famous advice from Warren Buffett. Be fearful when others are greedy, and greedy when others are fearful. It is simple to say, but incredibly difficult to do because it requires going against our deepest human instincts. It means selling when you feel like you should be buying more, and buying when every fiber of your being is screaming at you to sell and run for the hills. This emotional discipline is what separates the winners from the losers in the long run. The next time you see a headline about a hot new investment that is going to the moon, take a step back. Ask yourself, is this an investment based on solid fundamentals, or is it a speculation fueled by hype? Am I acting like a professional investor managing risk, or a gambler chasing a jackpot? The answer to that question could be the difference between building lasting wealth and becoming another cautionary tale. Remember, the goal isn't to get rich quick. The goal is to get rich for sure. It's about a disciplined, patient, and often boring process. It's about avoiding the big mistakes, letting the power of compounding do its magic, and keeping your emotions in check. That's the real secret of the millionaires who stay millionaires. It's not as flashy as a headline, but it's a far more reliable path to financial freedom. Thanks for watching today. If you found this perspective helpful, make sure to hit that like button and subscribe for more content on building real, sustainable wealth. Let me know in the comments if you've ever been tempted by a hot investment and what you learned from the experience. See you in the next video.